What's up, everybody? It's your boy Shawn CPA coming back at you with another video. Today, we're going to talk about how selling your home affects your taxes. Now, this is something that I think people actually kind of overcomplicate. I think a lot of people, selling your house, buying or selling your house is a stressful thing to do. Like, I think people and then so is doing your taxes. I think a lot of people also just have a stigma around their taxes, that it's a very stressful process for most people and problematic because some people have to pay taxes, some people get a refund, which is nice for them, but I think for the vast majority of people, they think it's a stressful situation. So you put selling your house on top of that and how those numbers work out, and is there going to be a big bill at the end of the year? They overcomplicate it. So the way it works, right, is there's an exclusion for your primary residence. If you're a single filer, it's up to $250,000 of gain, not proceeds, gain. And if you're married filing jointly, it's $500,000 of gain again. So what does that mean? Let's do an example. Let's say I bought a house for $100,000, okay? And then I got an offer to sell the house for $500,000. How would that work? My proceeds would be $500,000 minus my basis, which is my basis is how much I put in, $100,000 in buying the house. But let's say I put in another $150,000, which sounds like a lot compared to the fact that in my example I bought it for $100,000. But let's say I put in another $150,000 to improve the house. I added a pool, I redid the kitchen, I did all sorts of crazy stuff. I put in $150,000 while owning this home to make it better. Now my basis, right? My basis is $100,000 that I put in to buy it, and the $150,000 I put in to make it better. So my basis is $250,000. Somebody's offering me $500,000. I take the deal. $500,000 minus the $250,000, which is my basis, leaves me with a $250,000 gain. Okay, gain, not $500,000, $250,000 in gain. Since I'm single and I file as a single filer, that $250,000 of gain is excluded from tax. I pay no tax on that gain, which is nice. The reason this is in there is that Congress essentially doesn't want to punish people for making a sound investment with their house. They want you to have money so you can go buy another house to live in, So in my example, my basis left me with a $250,000 gain, which is totally excludable. If I was married, it would be $500,000. I could have a $500,000 gain and not pay any tax on it. But if I had, if my basis had been $250,000 and the house sold for $1 million, let's say I just appreciated like crazy, all my improvements paid off super great, house, someone wants to give me $1 million for it, whether I'm single or married filing jointly, my gain is $750,000, right? That's way more than $250,000, and it's way more than the $500,000, which are the two exclusion amounts. So I would pay tax on the difference between my exclusion amount and the rest of the gain. So just to finish off that example, if I was a single filer, I would have $750,000 worth of gain if I sold that house for $1 million, minus the $250,000 exclusion. So I would pay gain on, or capital gains tax on the $500,000 of gain left. Okay. Just any amount of gain outside of the exclusion, you pay tax on. Any amount underneath, you don't. And by the way, your closing costs and home improvements, all of those things do contribute to your basis. So the good thing about that is they essentially lower your gain. So if I, like I said in that example, the basis in that house is $250,000. Let's say to sell it, it costs me another $10,000, all the closing costs and all that stuff. My basis now is $260,000 minus, whether it was a $500,000 offer someone gave or a $1 million offer, that extra $10,000, my basis is $260,000. So that lowers my gain. So there you have it. It's actually a relatively simple calculation. I think people just expect it to be worse than it is, but it's relatively simple. And there's a big fat exclusion in there, single, $250,000, married filing jointly, $500,000. That's all tax-free gain right there, which is great. Shout out to the IRS for that. Anyway, if this video is helpful to you and you liked it, give it a thumbs up, subscribe. If you have a question in the comments, I leave a comment and I'll definitely answer. If you need help with your tax situation, your business situation, hit me up. Me and my company, Shawn Gill, CPA and Neutron Tax. You can book me for a call, a free call, with the link in the description. We can do a free strategy session and figure out how I can help you if I can, and we can work together. Thank you for watching. Again, my name is Shawn Gill, CPA. Peace.